Hello everybody, in this video I'm going to be doing a brief stock analysis on Alibaba, ticker symbol BABA. On my channel I do a ton of videos on investments that I think are really great for long-term potential, so if you do enjoy the video, please be sure to come and check that out. The first thing I wanted to point out is the stock price, as well as that it's seen about 85% growth in the last 5 years, with most of that coming in the last 5 years, and it's seen a little bit of resistance in about the last year or so, but I'm going to talk about why I think that's going to change in the next few years for the better for Alibaba and for investors. The most exciting thing for Alibaba investors that I'm going to talk about in this entire video is definitely going to be the 8-to-1 stock split that occurs in the first half of next year. So just very quickly, what a stock split is if the stock price is $200 and they do a 2-to-1 stock split, if you owned one stock before at $200, after the stock split, you would own 2 shares at $100. Why companies do this is to attract more investors. Say investors weren't willing to pay $200 for the stock, but a lot more will pay $100 for the stock. And it also increases the volume of a stock a lot. Even in a 2-to-1 stock split, it increases the volume a lot, and a lot of more people trade the stock. But in this 8-to-1 stock split, way more people are going to be trading the stock, which will increase the volume and also increase the market cap because people are going to be holding onto the stock while they're trading it. So overall, this is extremely good for the company and for investors, especially if you are holding that stock before they do the stock split in the first half of next year. And then if we look at revenue and earnings for the last 4 years, revenue is increasing at an extremely great rate, and then earnings is relatively steady with great increases year over year for the last 3 years. I think it's also worth mentioning that with a company with revenue increases this dramatic in the last 4 years, they are undervalued. It's not that the stock or the company is undervalued, but compared to a lot of the other tech stocks out there right now, because this is a Chinese stock, I think they're well undervalued compared to a lot of the other tech stocks out there right now that are comparative to Alibaba. It's also worth mentioning that on Yahoo Finance, Alibaba does have a buy rating of a 1.6, which is very strong and stronger than a lot of the other really big market cap tech companies out there. And they also have an average price target of $221 for a year from now, and it's currently at $172. And I think after that stock split, you're going to see that soar well above $221 for the 8 shares combined. Next up, I just wanted to touch on that India is the key battleground for e-commerce for Amazon and Alibaba, and I wanted to scroll over and show the whole image, but I also want you to be able to read the different companies. But Amazon in India right now is currently covering finance, payments, on-demand, publishing, and e-commerce, whereas Alibaba is succeeding in India with logistics, news, payments, tickets, grocery, on-demand, and e-commerce. And Alibaba in the last year has actually not seen great growth because they are not doing tremendously well over Amazon in India, but I actually don't think that is the worst thing in the world for Alibaba. I think as long as Alibaba continues to see strong revenues in India, it does not matter which company ends up doing better. In the country, I think both companies have a lot to gain from this booming economy. Also, I wish I was a little bit more familiar with some of these Alibaba companies and platforms, but unfortunately I'm not very knowledgeable about all of these, but it is definitely worth looking into if you want to familiarize yourself more with their business model. I also just wanted to show a little bit more detailed of a chart for their revenue growth for the last few years. It's growing on average 50% every single quarter, so I think that's extremely strong for Alibaba and not something you really see for a company this big. I think it's also definitely worth mentioning that on Robinhood, 51 analysts have given Alibaba a rating, and 50 of them have given them a buy rating, and only 1 analyst gave Alibaba a hold rating. Even if you don't believe in some of the opinions that I've expressed in this video, I think it definitely has a lot of value that all of these different analysts on Robinhood and Yahoo Finance have given Alibaba a buy rating. Next up, I just wanted to briefly talk on a few points by an analyst at Morningstar who gave Alibaba a buy rating. And the first one is that Alibaba's China marketplace boasted 554 million active buyers as of March, more than 45% of China's total population. We expect a long runway of user growth in coming years. If you think back to 15 years ago, only maybe 10% of Americans were using Amazon, if that, and then a few years later, 20%, a few years later, 30, 40, 50%, it goes on, and I think we're really seeing the same thing with Alibaba right now. And if Alibaba can also continue to increase profitability profitability, sorry, on each individual user, I think there is tons of revenue growth potential for Alibaba, and just in China, not even in Asia in general. And then the next point that I wanted to touch on is that we believe the bulk of Chinese internet shoppers view their shopping platform, I really don't know how to pronounce it, but I'm just going to guess Taobao, as their first online shopping destination, implying exceptional lifetime customer value potential. And I think that's very, very important for Alibaba, just because there is more competition for Alibaba in China, even than we see for Amazon here in the United States. I also wanted to take a look at a few points given by an analyst at Morningstar who gave Alibaba a sell rating. And the first point is that there is rapid expansion of other China digital commerce players such as JD.com and Vipshop, and there are some others as well. But these companies are highly speculative, and it still remains to be seen if they are going to be remain profitable and if they are even going to be in business in a few years. And even if they are, I think Alibaba is just a way bigger business and doing a lot more internationally, and they're going to be able to succeed a lot more than these smaller companies. But still, these companies do definitely have the potential to take away customers from Alibaba and hurt profits. The next point is that Alibaba has invested in businesses outside of China that may not enhance its network effect. And if you think of Microsoft, Google, Amazon, Salesforce, these huge companies are all investing in companies that may not enhance its network effect. And I really just think they're doing this to make a ton of money and almost as a venture capital sort of investment. And then the point goes on, this could divert management's attention from expanding its core marketplaces and other key business segments, which I don't know if I really agree with. And then my favorite of these sell rating points is that despite its e-commerce leadership in China, expansion into other regions beyond Southeast Asia could pose obstacles because of the entrenched position of competing local marketplaces. As I mentioned earlier in the video, they are still seeing a ton of competition in India with Amazon, but I think they are going to definitely see a lot of revenue in India. But the point there is that they are going to be competing with local marketplaces, and I think in a lot of these really big growing economies in Asia, they're really going to be looking for e-commerce companies like Alibaba, and Alibaba is really just going to be ripe for the taking with these booming economies, and there's going to be tons of money to be made. Please do come check out my channel for a lot of other investment videos if you did enjoy this one. And let me know down in the comments if you have any questions about Alibaba, and I will do my best to answer them. And subscribe for more content. Thank you so much for watching to the end.